Good morning, everybody. Good morning. Good morning. It is Wednesday, November 20th, 9:10 in the morning. Hope everybody has had a good week so far. Hasn't been too bad. It's been a slow grind to the upside. Let's take a few minutes, take a little bit of time to kind of review what's going on in the market, get a game plan. We had some pretty decent earnings this week. Take a look at the sectors in the last few days. So this is where we're at the moment. You can see from the after hours and the pre-market, a lot of the sectors got hammered down. The bonds are pretty much flat, and the indexes are trying to come back up off their lowest pivot. All in all, it's looking like it could be a pretty decent start to the morning. Earnings season is really winding down, and that puts more focus on all of the tariffs, the Yahweh, Brexit, impeachment. Any kind of media hype is going to be more volatility, just because of the idea that the sectors through the earnings aren't really in play as much. It still leaves us plenty of opportunities. Volatility really is our opportunity to make some money. If you didn't catch it yesterday, we were calling the reversal on small caps and the NASDAQ about an hour and a half into the day. It wasn't really that big of a surprise. When you're watching the AD and the money flow, there was a lot of divergence in the Russell. So what was going on was that there was more issues declining than advancing, but the money flow was positive. So there was more money flowing into the Russell than there was flowing out of it. And we had this move up, right? And then it gave it back after some economic news came out, and it rallied back up again. We didn't have a lot of market sync yesterday. The markets did not move in unison until right around the lunchtime. They finally stabilized and started moving as a group. Now, day trading anything, especially penny stocks, it might seem like there's just no value in looking at this stuff, right? Why would I look at the Russell if I'm trading X steel? Well, everything correlates. There's a lot of banks and financial institutions in the Russell. They're small cap companies, and there's a lot of them. I went and took the opportunity to make a trading list that only had banks below $20. It was a pretty big list. So when you're trading small cap and you're trading penny stocks, keeping your eye on the Russell is kind of a big deal. It gets overlooked a lot, but a lot of what you're going to trade is in this thing. So there is correlation. And when you can get all four markets moving in the same direction at the same time, most of the marketplace is going to do the same. If you're already in something that's really volatile, which is what we do, when we're day trading, we're looking for something that's moving. We're chasing momentum. We're looking for something that's got some kind of parabolic move behind it. When we can get that little extra push, it can really change the dynamic of how we're approaching our trades. Right? A lot of people who are day trading are scalping. If you look at there's so many definitions of what we consider scalping, but if we just all agree that Investopedia has a really good definition, you're going to take an overly large position for a very small move in the market. To do something like that, you really need No wiggle room. You pull the trigger, price goes in your direction, and you get back out again. It's not getting into a trade and letting price wander around. And so when you're looking for that kind of setup, order flow is key. The problem with order flow is that your brokers don't spend money to give you nanosecond information on order flow. So level 2, time and sales, uh, this data is delayed. The trading firms, the off exchanges, the dark pools, and your lit exchanges, they have 30 seconds to report a trade. 30 seconds is a lifetime. The off exchanges have longer than that. Depending on who placed the order at the off exchange, they could wait until the end of the day to report their trades. That's why sometimes after the market closes, you see these insane wicks, and that's because they're dumping that day's trade information into the marketplace. So if your strategy is an order flow strategy, if you're doing something like a scalp and you're going to get in with momentum and trend behind you because you see an uptick in volume, that what you see has already happened and it could be delayed by as much as 30 seconds, and that really handicaps your position. But when you start looking at other things, since we know that we can't rely on time and sales and level 2, what we can rely on is the momentum behind the entire marketplace. Market breadth, the AD and the tick, is showing when people are trying to not only get into a trade at the bid or at the ask, they're pushing, right? They're not just taking price as it is, where it is. They're pushing. They're willing to pay that little bit more, right? They're willing to sell it for just a little bit less, either direction. When you combine those things together and you get all of the marketplace moving strongly to the upside or strongly to the downside, no matter what you're trading, it is also going to have that wind in its sails. I had been waiting to see the gapper list, maybe get some ideas for different products we could start looking at this morning. I had spent most of the morning building an iron condor counter. It's a Friday expiration iron condor trading strategy that I'm putting together. Um, and what it would do, you can see the lines here on this chart for an example. It counts Monday through Friday, and at Friday's close, is the market within the boundaries of its expected move? And if it is, out of 52 weeks, how many of those weeks would have been a profitable iron condor? If you think about flipping a quarter, you have a 50-50 chance. That means you should win at least 26% of the time, or 26 out of 52. We want to do better than that. So I'm building the counter to at least find something greater than 30, and I would like to find greater than 32 to increase our win rate potentials. And of course, if you close the trade early, manage it, then you can get the win rate even higher than that. But we have to have somewhere to start to get Thinkorswim to do a lot of the legwork for us, because we don't want to crawl through the charts, literally counting week by week how many would have won and how many would have lost. We want to automate things as much as we can. And because I was crawling through those Thinkorswim codes, I hadn't had an opportunity yet to go through and build my morning watch lists like I normally would do. A few things that typically always is on my list is USO and X Steel. AMD is in play a lot. It's really looking like my projections for AMD are going to hold. I was calling a uh, a 100% increase in this when it was sitting at 30. I'm really thinking that AMD is going to be a $60 product by this time next year. I'm not much for investing, but this would be one that I'd be willing to invest in. You do need to give me a moment while I go over to the Bullish Bears website and log into our trading room. I always start the streams early on YouTube, so we have a few moments to chit chat before I go in and bring in the rest of the group. If you haven't had the opportunity or you haven't done it yet, stop by the Bullish Bears. You can find it on Google, bullishbears.com. We have a 14-day trial, so you don't have to spend any money. Right? Sign up, join for 14 days, check out our educational content, and of course you get access to the streaming rooms. You'll get access to our live trades that we call out on Twitter, which is, you might see us on Twitter already, but we have a private Twitter where only members get access to our trades, and then we post trade entries and trade exits. So if you don't yet belong at the Bullish Bears website, by all means, please stop by and sign up for your 14-day trial. I started trading last June. I'm a very new trader to the marketplace, and I never try to hide my experience level. I'm kind of proud of how far I've come. I learned what I've learned from being a member of the Bullish Bears, and between June and November, I learned enough, and I took a $300 account and grew it big enough that I was able to quit my day job and stay home as a day trader. So it's kind of a poster for the idea that it not only can be done, I personally did it. So give me just a moment. I need to give a shout into the room. Good morning, everybody. Could I get a sound check real quick, please? All right. Good morning, everybody. Creed, you pimp. I'm a minute or two late. I was babbling on YouTube and lost track of time. It happens. I actually spent the morning building an iron Condor counter for weekly expiration trades, and my coding has gotten a bit rusty. It took me longer than it should have. Been a pretty interesting night so far, and a pretty interesting week. There's been a lot of talk, and you know that the bobbing heads on TV, they really get to chip in their teeth every time the market sets a new high. Oh my goodness, we're at the highs. Here we go, we're going to crash. And if you look at the marketplace with the linear regression tools, you can pretty much just pick one. Out of all the indicators that you could play with on the marketplace, 95 of them will blow up your account. They're that bad. 95% of the indicators out there, you're better off flipping a quarter than using. But the linear regression tool is not one of those. Cyclicality and a market stretching too far beyond its mean has been proven again and again consistently to reversion back to the mean. It's one of the few indicators that you can actually rely on to give you some perspective of how far we are away from its mean. And so then you can kind of get this feeling like, are we, what the really horrible word, overbought and oversold? Those are really bad connotations. Gives you this perspective like we're overstretched, or we're getting ready for a reversal. So I don't like to use that language. If you look at the linear regression, and it does matter how many days are showing on your chart. So if you've got a 1-year daily chart and you change it to a 2-year daily chart, this channel will change drastically. But you got to look at this channel and ask yourself, if the middle bar is the mean, is the average, how far away are we from the average? And you can see at the end of 2018, when we pretty much went an entire deviation away from the center, we snapped back like a rubber band that you let go, right? Price had pulled itself too far and it got whipped back into the direction we wanted to be at. Right now, we are not, quote, stretched too far away from the mean. We really aren't. And so with all these talking heads on TV, potting in the doom and gloom and the reversals right around the corner and to be scared of getting in at the highs, we're not investors. We're traders. We get in at the highs. We get in at the lows. Because if we don't, then the other choice is to sit out. All right, and there's plenty of other things to trade other than SPY, of course, and Apple and all the other things that are pressing against their highs. But the idea of sitting out of the market on a week-to-week basis just because it's at all-time highs or at all-time lows does not apply to a trader. That applies to an investor. So ignore the bobbing heads. Use your own perspectives. I see Dan is giving a shout out on Nike, AMD, Apple, Netflix, Spotify, and Starbucks. There's a lot of great option markets that he gave a shout out on. I, of course, have a few of the cheaper markets. X Steel is always on my list. This thing has got a really great ATR for the size of its company. And on a day-to-day and week-to-week basis, it always offers me an opportunity to get into the marketplace. So it pretty much stays on my daily watch list. Another one that stays on my list quite a bit is USO. And depending on if we have an oil report, USO can be a great thing to trade. And so what you do to find out is you go over to Market Watch at the top of your tab, and then go to the calendar, turn them all off, and then turn on the Econo Day event. And you can see that we have a petroleum status report coming out at 10:30. And that's exactly what we want. Just like waiting on the Fed day for Jerome Powell to go out and trip on his own tongue so that we can trade the volatility that happens afterwards, this is one of those days that we get to do it with something a heck of a lot cheaper than SPY. We get to do it with USO. And so at 10:30, we want to have USO up on the screen, and we want to be looking for an opportunity. Now, 8 out of 10 times, it's just going to spike momentarily, and it's going to ease right back to the mean. And it isn't going to give us anything, and that's okay. The 2 times that it doesn't do that, it's going to spike hard to the upside or dump like a waterfall, and that'll be our opportunity to trade that instead. Right? So most of the time, we're not going to get anything out of that USO trade. But there are those rare occasions. And when you can actually know one day that there's something coming and you can sit there and wait for it, you know what time, you know what day, you know everything you need to know to be able to play that. There's your day. Okay? So you can add an alert. Thinkorswim does give you this opportunity. So you want the EIA petroleum status report. You make sure it's clicked. And then you can tell it 15 minutes before. That way, you've got a little bit of time. And bada bing. Now we've got our alert set so we don't forget the oil is going to be coming out. Are there any day trading penny stock markets that are getting your attention this morning that you want to take a look at? I see Lucian posted about FSCX has a cupping pattern on a daily, 1 hour and 5 minute. He says, watch for potential continuation with resistance, with price levels. Man, he gives you guys the whole bread and butter, right? I mean, the entire menu was right there. You could just set your alerts on it. He gave talking about feeding the bears, huh? Or the bulls, feeding the squirrels. Oh, I didn't know you were still in the room. Lucian, you're not supposed to be here when I'm talking good about you, but only when I'm talking bad about you. We don't want your we don't want your head to get big. Normally I'm bragging on your website skills. Uh, the changes to the website, people, in the last year are just absolutely amazing. And if you are new, you don't know what it used to be. If you've been here all along, the changes have been so soft and subtle that you really don't notice it until you do. And then you're like, "Oh, damn. I didn't even realize." It's been those kind of changes. Um, which is nice because I don't like change. I don't think anybody likes change. It just they come in one day and the couch isn't where it used to be, and it just bugs me, right? But he made the changes so subtle that by the time it really crept into your consciousness, you'd already gotten used to it. So if you're only going to our live stream rooms every day, guys, you're missing out on a lot of really great content. The blog posts, the educational content. There really is a wealth of data there, and it's searchable. So you don't have to just go in and like scroll and scroll and scroll. You'll be scrolling through years worth of posts, but you can go in and you can search for what you're looking for. So if you hear somebody in the stream say something that you don't understand, hey, write it down and then go search it when things get slow around lunchtime, right? Um, kind of like when I was talking about the linear regression and reversion back to the mean and cyclicality. If any of that kind of threw you off, jot it down, search on our website in the blog posts or on our YouTube, and I almost guarantee you're going to find some kind of information that we've presented on it. We do trade ideas, trade strategies, concepts, education. If we don't have something that you're looking for, give us a call, give us an email, give us something. Come in the room and bang your drum and say, hey, you know what? I was looking for this and I can't find it. I'm glad that worked out. The PPS trade strategy has been really great. One of the reasons I love it so much is that you can check its win rate for every single market. So you don't have to because you know how it is. Tesla's way more volatile than, say, um, Sirius XM, and it might be a great product to put on Tesla, but it might not be a great product to put on Netflix, right? And so PPS can identify its win rate for every single product that you're going to put it on, and that means before you pull the trigger if it's better than 80% win rate or not, and that's nice. That's not relying on some win rate average that can really get us in a bind. So I'm looking for a 5 minute candle, and that way we can get a little bit of market direction. I'm not going to dig into the PPS right now because it is a swing trade strategy, and it does rely on options. And my Wednesdays are most often a day trading stream on Wednesday, which means I focus on penny stocks, things below $15, and more often than not with shares and not options. That doesn't mean that I'm not interested in talking about it, though. So when I'm done with my regular live stream, if other people don't want to contribute to the streaming right away, then I could stick around a little bit and we could talk about the PPS. It's in my Discord, by the way. So if you wanted to just go in there, you could get it. Oh, no reason to be sorry. No, absolutely not. There's no reason to say that. But I could point you in that direction and say, go to the go to my Discord, and you'll find it in scans. Bull Guy is giving a shout out on MYOV. So this thing yesterday, it caused and created a massive engulfing candle. And every time I see one of these, I think of the island reversal. We don't have much information to go on here yet. It hasn't validated this new price range. And I can still hear Lucian in my mind talking about how a market wants to fill its gap. So when we start to take our time and move into the lower levels to see what we want to do to trade this thing, you can recognize it's already pulling back from its high. It did break the roundy at 14 and is falling back in. These levels, notice what it did here. It closed the gap. And that's where it stopped, by the way. So there's the first gap that it closed. That was yesterday's price action. And today, it now has to worry about all of this stuff that it broke through with such strength yesterday. So we've got a couple of areas under concern. And you can see where it hit high a day today is right at that price level that I just drew, that 1424. There's a reason it stopped there. It's a very strong resistance point. So now that we've got some perspective on the higher time frame, kind of step in a little bit. So you can see yesterday's pivot point, and then it's where price has gravitated throughout the Globex and the pre-market. And it was a very solid rejection. And there's your downside whip. So if you're looking to trade this, you define your range. You've got your Globex low. You've now got your high a day. To go short, for me, I would want to see a close below this Globex low. And to go long, I would want to see a very strong reversal here. So the next candle, what we would call a thrusting candle, would be to come off of this low and thrust with conviction back to the upside. So those are your two possibilities, right? If I had my drawing pencil, we could draw a whip in this direction and a whip in this direction. My drawing pencil. How you doing, Creed? It seems like we never get a chance to chit-chat anymore. So the $13 is a psychological support area. Roundies really tend to do that. And one of the things that you'll always have to think about is what are other traders thinking about? Thrust with conviction. You have to think about what algorithms are doing as well. So not just what other traders are doing, but what are algorithms doing. So this is your thrusting candle that I was just discussing. We want to see this thrusting candle come back up off of our support with conviction. We don't want to see it jacking around. You can see these candles here when it came down into the support area and they kind of malingered and they just couldn't really pop back up that strong. This was a lack of conviction. And the difference should be very clear, very obvious that what we are seeing here is the buyers stepped in with a clear understanding of where they want to go. And they were willing to get it. And that's what you're seeing. That's the conviction that they're holding in this trade. Now, the danger and the concern is that these sellers are still here. And so what we've got forming right now is our inside pattern. We've got our open range clearly defined. We've got our open range low at the bottom of this wick. And we've got our open range high set at that doji. Yeah, you guys probably want to be careful with any broker you use. Every broker has issues. Every broker's got that one thing that you love, but every broker has issues. And one of the issues that I have with Thinkorswim is that you can't trust their indicators. The code can be 100% perfect, and yet their indicators will dump you on your butt. They'll lie. They will lie. I see a shout out for FUV. Let's go take a peek at that because this market that we're looking at there, wow. All right, so this market is up 57%, 59% for a moment there. Still running strong to the upside. Watch that 350. It's not a roundy, but a half, and halves are also just another area of psychological support and resistance. Look at how many times it hit that 350 and that $4 range, and it took a rejection. And you can just look left and identify all those different times that it got rejected at those levels or that it gravitated there and just couldn't get anywhere else. So very strong break above the 350. It's still running with conviction behind it. And it tagged that it came really close to the $4 mark. Came really close. So an amazing move this morning off of FUV, which I have to admit I've never heard of FUV, but there's 4,000 products on the marketplace, and we all kind of get comfortable with the familiar ones that we see day to day. They become like cousins, after a while. This is not one that I've had an opportunity to play with, but I like how much volatility I see here, and this is going to be something that we look at more often. So thanks for the shout out on that one. Kind of just taking a look, making sure I'm not missing something. We're going to put MYOV back on the list so we can go back there later. So yesterday in the streaming, I kind of came on. I like to just come in and chit chat for a little bit. I've noticed it really helps traders out if we can just have a talk once the market kind of settles down and we get into that lunchtime. There was some talk about using stops. Depending on the trade strategy you use, trust me when I say I don't like stops. But if you're scalping, stops are kind of one of the pieces of the puzzle that you have to have. But if you're not scalping, there's been a lot of research done on stops, and your win rate drops by over 25%. So let that sink in. The stops, they cause you to have losing trades. Depending on your strategy, you might want to take that out. But like I said, it really does matter which strategy you're using because some strategies absolutely need a stop. So we can't just rubber stamp things and say, oh, I never use a stop, or hey, you should always use a stop. You can't. It really has to fit what you're trying to accomplish. So we're getting that strong pullback in FU. I want to see this hold that $3 mark. This is very important for me. 326 should be slowing it down, and I really want to see this maintain that $3. If it doesn't do that, I wouldn't look to play with it anymore at that point. You don't want to be anything that's whip, right? You want conviction. You don't want to just get in it and then you're just hope. Yeah, that is the FU symbol. When I first heard everybody talking about the FU pattern last year, I was like, there seriously can't be a candle pattern called the FU. But if you draw it, it really is the FU pattern. But what we don't want to see is a market that starts to linger and trade sideways and then get in when it's sideways. Because at that point, you are in a 50-50 trade and you could flip a quarter to hope it goes the right direction. So we don't want that, right? We want to see a market define itself and then give us some kind of trade pattern. Now, the trade pattern that I love to use on an intraday basis is the open range. I don't like to trade within the first 15 to 20 minutes unless I'm in futures. And so in the 15 or 20 minutes that I'm waiting for the market to define itself, a lot of times I will miss things that run to the upside or fall to the downside. Tom Busby says a market that breaks out more often than not will pull back to its resistance point, which is now its support point. It'll pull back to that range and test it or validate it. And so if you feel like you're being left behind because you're following some set of rules that say, look, you should set out for a little bit and let the market have some price discovery, and you're feeling like, man, I'm getting left behind. This thing's moving, and I want to get in a trade. If you go back and look at the how often a market pulls back after it breaks out, it pulls back more often than not. So wait for that. If you get the big breakout like we just saw here on FUV, the next thing it did after it broke to the upside was it pulled back to validate a support level. And this is not a really good example because, one, we don't have very many candles, but two, this thing's been running sideways, right? So this isn't the best example to use, but the guy has been around half my life in trading. I'm in my 40s. He's been doing it for 20 something years. I don't know the man. I've never met him, but I've watched a lot of his videos and I've listened to a lot of what he's had to say, and I've gone back and kind of checked for myself that what he talks about is accurate, and it helped me personally kind of get rid of that FOMO when I would see something breaking out and I would want to get in on the breakout in the morning. And we're not talking about throughout the day once we've had like a channel and then it's breaking out of a range. I'm talking about the first thing in the morning when the bell opens and something just starts ripping to the upside. I wanted in things right there. And it would really bug me that my rules would tell me to sit out. And now I've kind of calmed down a bit because he's right. I've gone back and I've looked at chart after chart after chart. And so many of these morning breakouts, the first thing that it does within that 15 minutes is pull back to validate the breakout. And then if you do a lot more research, you find out that most intraday breakouts, they fail more often than they succeed. So it has breakouts have a failure rate of over 80%. And then so for that 20 that's there, how many of that 20% after the breakout comes back and retests its range before continuing on in the direction it wanted to go? It's a pretty high win rate. So don't feel like you're missing out on the break. Be prepared. You see a breakout, draw your line, identify your support level, and say, this is where I'm looking to get in. at my support level. And you can't just put your order right on the line. You got to give yourself what we call front running. You got to front run it a little bit, and be prepared to take some heat, and recognize that the algorithms are going to hunt for your stops. So you don't want to put your stops in a very obvious place. And you don't want to use some arbitrary risk to reward ratio like a 2-to-1 or a 3-to-1. You really need to know what's your win rate on what you're trying to trade. Because if your win rate is, say, 25%, then you're going to need a higher risk to reward ratio. And believe me, there's some really great trade strategies that have a 20% win rate. Just because you only win 20% of the time doesn't mean they're not good. So 250 seems to be our real serious overhead resistance. And there, it's like a springboard. It's making its move up, breaking its high of day. And the open range breakout on this, you can set an open range breakout from the first pivot, from the first 5 minutes, 15 minutes. I've kind of gotten away from using time in my open range. Instead, I use pivot low, pivot high. The first low of the day is where I put my open range low, and then the first high point of the day is where I put my open range high. Now we haven't got our high set yet because it hasn't pivoted lower yet. It's still setting higher highs. So when we get a lower high, we'll have our open range. Right now we only have the bottom. So Aurora Cannabis is going to be on the list this morning because it's looking really good. Got some great trade ideas there. We got a Halt shout out in the room. I want to thank you for that, Hank. ARAV is halted. A lot of retail traders in here this morning. There are trade strategies to trade a halted market. I'm personally not comfortable with them. If you are looking for a new strategy, I think Creed's done some work on halts, and you would want to check our YouTube page for that to make sure. There's a strategy for everything, and you can literally trade anything. You can trade a parabolic market when they always say, "Oh, don't do that," but that's not true. You can if you have a strategy. You can trade a waterfall if you have a strategy. So you don't have to feel like you're chasing when you have rules in place, right? And you got to defer to someone who's done their homework. And guys, I tell you that Creed and I, we don't have a life. We're nerds, and so we spend a lot of time doing our homework. So check out his papers on this and see what you could use out of all of that to build some trade logic. NSYS is a dud this morning. We're going to take that one off the list. APDN turned out to be a dud this morning. Take that off the list. ENDP, a lot of volatility this morning. It didn't quite reach that $5, but it's still up on the day, 5.25, 5.75. So this has got a clearly defined high, and it hasn't given us our low pivot of the day. So we've got our pivot high. There's our open range to the top side. Let it define itself for our bottom side. And then from there we could look for a trade idea. If you are interested in jumping in a little early, make sure you look left. Identify a direction and then own it and take it. Wall Street is no better at picking direction than the rest of us. So getting into a market to go up or to go down, if you're doing better than a coin toss, then you're doing better than Wall Street. The only reason that Wall Street makes money while a lot of retail traders don't is because Wall Street, when they're in a losing trade, they will hedge or they will just wait longer than the rest of us. And so more often than not, they'll turn a losing trade into a break even. Got target testing. And I see someone giving a shout out on wheat stocks in general. I happen to have a watch list built entirely of weed. The reason for this is because of banks. I was looking at financial institutions, and you can't look at just XLF, which is the ETF for finance. You can't because there's bonds, there's credit cards, and then there's banks, right? And then some banks use your money to trade the marketplace, and some banks don't. Some are lending institutions, and some lend to only corporations, and there's all these different categories. It's the same with weed. Some weed products are going into beverages and foods. Some are medicinal that you're smoking, and some are used for like paper products and rope and that kind of stuff. So these really do have their own categories. And as you can see, when they run in a group, they do run in a group, but they don't always move as strongly in unison together. And if you can pair them into their groups for the ones that are, say, medicinal and that they're smoking versus something that goes into a drink like InBev, then you can start to break those categories down. Lucian's giving a shout out on GGAL. Bull flag is waiting on volume. Now, if you use order flow in your trading and you have the money, and it's not a lot of money, but there is a company called BookMap, and BookMap spent the millions of dollars that it takes to buy order flow data. Thinkorswim doesn't give it to you. Interactive Brokers, Tastyworks, um, those companies aren't giving you the second by second data. Book because it's expensive. It's super expensive. BookMap bought that data and they developed a program that costs around $30 a month, and it will change how you trade if you are using order flow. I don't need order flow in my data, in my trading, so I don't have any value for it. I've wanted to change in that direction, but I'm not home trading throughout the entire day, because once I'm day done, I'm day done. I walk away from the computer and go do something else. But if you're going to be at the computer all day trading, and day trading is your niche, and you want to use order flow, take the opportunity to go look at BookMap. There is a learning curve. Um, it's a revolutionary product unlike anything else that's out there. And so, of course, being unique and different, you're going to have to learn how to use it. The nice thing is they got all kinds of training videos, and it usually connects to a popular broker. So if you're using like Interactive Brokers or Thinkorswim or something like that, it'll connect to your regular broker. And so you will be able to trade where you normally would trade. You're just going to have a lot better picture of where icebergs and dark pools are hiding and where the algorithms are hunting for your stops. And it absolutely will change your day trading. I guarantee you that. And they've got YouTube videos and all kinds of educational content. So check it out if you're a day trader who spends your day at the computer. CGC has set its low of day. Now, Normally, I wouldn't consider this our low side pivot because we haven't technically set a pivot low. We don't have a pivot high yet because we've maintained higher highs so far. What we can do is we can recognize that $17 should be our psychological support. It's not the best thing in the world, but we have to have something to start with. The weed markets really are offering some opportunities this morning. Be aware that when we look left, there is a lot of resistance up in the mid 18s and into the 19s. But if I was to turn on the TPO, time price opportunity indicator, it's like a volume profile. So instead of having volume on the bottom, volume would be running sideways through price. We would see that this entire area right here is what they call an open pocket. And what happens when price gets into an open pocket is there's no resistance and it just moves, right? It doesn't hang up like it does here. You can see that this candle kind of represents exactly what I'm talking about. There was nothing to offer it resistance. No, weed stocks pretty much do what they want to do, right? People have really tried to find correlation, and right now I'm doing master's statistics in my college classes, and when you try to prove correlation, you take different variables and you try to find positive correlation, meaning when one moves up, the other moves up, or negative correlation, say when something goes up, something else goes down. You can kind of disprove some myths. So the idea that wheat goes up when the market goes down is not true. It feels that way. And if you think about negative correlation, think about climbing a mountain. The higher you go, the colder it gets. That's negative correlation, right? They're absolutely one that's connected to the other in an inverse way. Think of another thing, those Jamocha shakes from Arby's, which are just so good. The more of those you gobble down in a week, the more weight you will gain. And I know that for a fact because if you eat one every day for a week, you're going to have to go buy a new set of pants. I learned that the hard way, so don't do that unless you want to go shopping for new clothes. TGODF is up 13%. Now you got to recognize this is a 50-cent product. Right? It's a very cheap product. So just be careful with it. It did gap up this morning. Put a little bit of volume here. Creed's going to liven up the situation a little bit. So we're going to a little bit of volume. Just recognize that TGODF is a very low volume product. To be very careful if you're wanting to play with something like this. The allure of taking a big bite out of that can get you into a bad situation. Yeah, I think international, is it international Creed or interactive brokers? Interactive, yeah. I think they keep winning awards for having the shares to trade more than any other company, right? Like if you go on Thinkorswim and you'll see, no shares found or hard to borrow. If you see that message a lot, then you're at a broker that can't get that access. Now, Speed Trader. Dan, wasn't there an article on Speed Trader not too long ago? Did they change their system around or they changed something? It's getting harder to keep track of the companies that are out. Oh, sure. Yeah, yep, you're right. There's getting to be so many of them that so many popular ones that it's getting kind of hard to keep track of everything. I'm really excited about Webull. If Webull finally gets its options up and running, that's going to be so great. Um, I like Robinhood because of that $2,000 margin. When I was only trading options and not futures, um, I kept my account at around 2,000, and whenever my account doubled, then I would pull money out and drop it back down to a $2,000 account. $2,000 on Robinhood uh, gives you $4,000 of buying power, and that was more than enough for me to make more than what I was making at a day job, and I was able to quit my job and go home. Webull is a great mobile broker, just like Robinhood, but it allows you to do so much more. Here's AMD, and I'm comparing AMD with Micron and Intel, and that's why you see three different markets here. So if I was to go in and like lay out the wheat stocks, for an example, I could easily compare them. And of course, we can do that on Thinkorswim. You know, we can do it on Interactive Broker, blah, blah, blah. We can do those things. But Webull also breaks things down into market sectors really well. Um, I'm horrible at utilities. I can never seem to think of a utility company right off the top of my head when I need to. And yet, REITs, real estate investing. There's not a lot of REIT companies that I know that I trade on a daily basis. They're doing really good today. REITs are doing good. Precious metals and minerals are doing good. Home builders. Um, and so not only are you seeing the sectors, but you're seeing breakdowns inside of them, right? Like this is showing you, hey, we're watching 5 markets in home improvement products, and out of those 5, 2 are doing good and 2 are not, and 1 is kind of flat. So it gives you not only sectors for some perspective, but markets inside those sectors. And you didn't have to learn anything. You didn't have to go in and program it and set it up. It's just there. It gives you earnings nice and easy, so you don't have to go in and build an earnings list. Um, Webull has got really great perspective on the marketplace. So it's got your market breadth, your money flow, your advanced decline line. You got your global perspective, which is the first thing that I do when I wake up in the morning is see what happened around the world. And you can break that down into Asia, which is closed, into Europe, which is still open for a little while, into only North America, or into the global perspective. And I didn't have to program it and tell it that I wanted this. It just does it for me. And I seen a shout out for Roku. So for an example, we jump over to Roku, and you'll notice that it gives me some really great data. Here's the higher time frame support and resistance already mapped out. It tells me my free float and shares outstanding. So if you're looking for like days to cover or short interest, if you're trading a low float product, you've got your time and sales, which isn't going to be any worse than Thinkorswim, but not any better either, right? From the earlier discussion we had in order flow. So just a really great product, and you can add more. You can put press releases in here, the financials, its P&E, any news, and then market analysis. Was it upgraded recently, downgraded recently, whatever you're trading, and then that just really cleans things up and puts information at your fingertips. You didn't have to go learn something new. You didn't have to program it. It's just there. And it's got all your common indicators. Absolutely. I'm on Webull desktop, right now. You have to actually search for Webull desktop or Webull application. I do remember that I had a difficult time the first time finding the darn thing, but once I found it, um, I got a lot of value out of this, and I don't know how I would do on a day-to-day basis without having it around. It pings my phone and does all kinds of things to let me know what's going on. You can also paper trade on it, um, so you can practice and run strategies, all kinds of things. You can scan for products, whatever it is that you would like to do. So I'm taking a look at Costco, Team, Roku. Got a lot of markets moving nice and strong to the upside. I am going to get Webull back out of the way. It's WEBULL. I've had an account now with them for over a year. I don't trade on Webull because they don't have options yet. But they said by the end of November that they were supposed to. And thank you, Dan. We have reviewed. I was just going to say, if you search our website on Webull, you would probably find something there. Dan took care of that for you. Remember, guys, anything that crosses your mind, interactive brokers, Webull, like anything, and you want to know more about it, the first thing you should do is think of our website like Google. The very first thing you should think of is, I wonder if, and then just search our website first to see if there is something that we've wrote on it or have analyzed or could point out a good or a bad. Plus, a lot of companies, Lucian and Creed and Dan have taken the opportunity to get us discounts into a lot of things, like a discount with TrendSpider or Black Box Stocks, or right. We're trying to build these relationships with other companies to where they recognize the quality of our members, and they say, look, we would gladly offer a discount to your members if you could give us a shout out, or something. So we don't give a shout out on things that aren't worth using. We're not going to sell ourselves out like that. But when it's a great product, it's a great product. So AMD is giving us a really great opportunity, guys. Look at yesterday and look at today. Here is what I'm focused on yesterday. Here's what we're focused on today. I don't like it when a market opens and just leaves me behind right at the bell. I don't like it. But I do love it when a market opens for the day and defines a range and then breaks out of that and lets me in. Because then I'm getting in with a setup, a strategy. And this will fit right into what Mel was just talking about. He doesn't always feel like he's getting a clear picture from what we're talking about when it comes to entry and exit points. So for AMD, I'm not reading all of the chat word for word that's coming through. So if he's talking about something that's already been posted, then I'm going to miss that in my point that I'm about to make. If you're not in a trade yet and you're looking at AMD and you're thinking, I could trade that today, the range is clearly defined. If you're not in a trade yet, there's three ways that you can look at this. I don't like to buy at the high. I don't like to sell from the low. I would rather that it bounces off the bottom and I go long, or that it bounces off the top and that I go short. If I'm thinking it ain't going to come back down to the bottom to let me in to go long, I would happily get in at the middle to go long, or from the middle to go short. The thinking behind that is if I get in, say at $41, which is our roundy and it's our gravitation point, if I get in here at 41 and I want to go short and I get rejected down here, I made this much and I can pay for my commissions. If I go long from 41 and I get rejected here, I made that much. I can pay for my commissions. It's not a loss, it's a dud. So you get the opportunity to at least get out flat. And you can start by scaling into your position. So instead of jumping in with, say, 100 shares, you could jump in with 25 shares and give yourself a pretty wide stop. If it moves in the direction you want, you can increase your share size and decrease your stop distance to keep your loss ratio equal. And then when you get your breakout to the upside, and everybody piles on at that point to jump into a trade that's breaking out, they're pushing your trade higher, and then you get the opportunity to get out profitably sooner. So there is talk about a wedge. You can see that it's forming that shape. We've got market compression here. We're setting higher lows and lower highs, and it's forming this price wedge. One of the first things that you always want to look at where the market closed yesterday. You can see that that's where we tagged this morning when we went up. We closed the gap from last night. So that move has already been done. The low of the day so far is this brick right here. That price shelf is the word I usually use, the description. That's our support. So our support for today, our open range, isn't just from price action today, it's from yesterday. Now we have everything we need to take a trade in AMD. Yesterday we were able to call the bottom on the Russell because of the AD. And with the help of the NASDAQ, we saw a change in market sentiment. When we go into the AD, you go to Market Watch, Visualize, set the visualization to Index Watch, check the S&P 100 first. 62% of the S&P is moving down. But look at the money flow, guys. We've got major divergence in the marketplace. 63% of the S&P 500 is going down, and we've got a almost 3-to-1 money flow going up. There is more capital, more money coming into the S&P than there is going out. This is divergence. Start looking for a bottom in the S&P. To make sure that it's not all by itself, check the other markets also. So go to the Dow. 22 are declining, 8 are advancing. We do not have market divergence in this. The money flow is negative, and the declining issues are negative. Okay, so there's no divergence there. Check the Russell. The problem with the Russell is it doesn't have hundreds. The smallest one you'll get is the Russell 1000. We've got 530 declining, and we've got money flow going to the upside. So here, again, we've got divergence. This is bullish divergence. We've got a 2-to-1 money flow. For every $1 going out, $2 are coming in, so a 2-to-1. And yet we've got more declining markets than up markets. So that's the Russell and the S&P. Next one to check would be the NASDAQ. Remember that the Dow, with its mega caps, doesn't always do what the rest of the market does. You could have one product like Walgreens miss an earnings, and it will drag the Dow to the downside while everything else is moving up. So we can't rely on that one. In the NASDAQ, 60 declining, 40 advancing, and the money flow is bearish. So it's in line with a downward market. So we only have divergence in the Russell and in the S&P. Yesterday we had it in the Russell and the NASDAQ. We're getting a shout out about oil and UWT. So let's go take a look at that. So we have divergence in the marketplace. Be on the lookout for a reversal or a bottoming pattern, and then look for sync. So UWT was a shout out from Lucian. Look at where it ran into resistance from yesterday's price action in the Globex and right at the bell. When it fell, it found its support right at yesterday's pivot point. That's yesterday. It also found that same level. And I bet if we go into a higher time frame, this 10-9 range has history. So now we've got this really beautiful open range. And if you're not in a trade, your opportunity is now to make a decision about what you want to do with this. If you want to get in before it tests, if you think it's going to fail here and go back down, whatever your trade logic for this is, the open range, it's a beautiful, beautiful system. And there's so many different ways to do it that you can customize it for each person. You know, make it perfect to you. Sorry, I was reading a little bit of content. We're getting a shout out on Apple. So we're going to add UWT to our watch list because I don't want to lose track of this market. And we're going to go take a look at, oh, that's my weed market. I don't want that in there. Let's get that out of there. That's not weed. USO is up 0.8% today. We're going to be looking for a trade opportunity on this if the oil report happens to introduce some volatility into the marketplace. We've got our defined high. We've got our defined low. And depending on what happens with the oil in 11 minutes, we could get an explosive move to the upside or a dump. The move to the upside, my target would be the round number, $12. I've got the line in the sand already up there. To get there, you can see that there are multiple price shelves to deal with. We've got one at $11.75. It's one of those quarter marks. And we've got here in the 80s and in the 90s, all to worry about. The thing about a news report, though, is there will be a lot of momentum, a lot of volatility behind the move. We should get some real whippy activity right at the beginning. So the first minute or two will be whip. You can't rely on that whip to indicate direction. It could spike to the upside before falling, right? So we don't want to see a spike up and jump in to go long. It could dump to the downside before running high. So just because you see it dump doesn't mean we should go short. We need some resolution, just like how we wait at the bell when a market opens for some resolution. This economic report is like that. It's going to be just like at the bell. So we don't want to just jump into the first wiggle in that candle. My upside target, though, if we do move up, will be 12. And if we go down, we're going to have to step out into a higher time frame and define our lower level. think we'd be pushing our luck to go to 11. That 11.25 would probably be more appropriate. It's a very strong, powerful pivot point right there. You can see we've validated that level multiple times. So 11.25 is not unrealistic. Well, I thought about it, Creed. I did. I thought, if we just go in with like 90% of our entire account in that first candle, we could take it to the moon, baby. Only once. Only once. Brady is giving a shout out on CGIX. We do have a little bit of time. The report is coming out in 9 minutes. So we can take the opportunity to go take a peek at that. Did I not put it? Oh, there it is. It's showing green on the TTM squeeze. Oh my goodness. This thing is up 250% on the day and still running. Like Forrest Gump. If you're not in it and you're feeling like to get in now would be chasing, you're partially right. But if you've got a strategy for this, you could perhaps do something with it. This is more of a hotkey setup, so you'd really want something like that. And then you want to be careful of a halt. This could trigger a freeze. Again, having a strategy to do something like this is the difference between somebody who's chasing and somebody who's trading. Right? And Creed had already said that he does have material on doing this. It is not something that I do. I don't hotkey. I'm missing some fingers, so playing around on the keyboard is not something that I do. I'm a point and click kind of person. And trade strategy, the only thing that I trade parabolic is futures products. I'll do it with a micro in the blink of an eye. I don't have any qualm at all of jumping into something that's going parabolic with a micro futures contract. Those futures changed all the rules because I certainly would never grab a S&P futures contract to do something like that. But I would do it with a futures micro contract. So what we're looking at here is it set the high right at the 50. Like we keep saying, those quarterly numbers, 25, 50, 75, and whole dollars, they absolutely are psychological areas of support and resistance. And they're also where institutions will place their orders, like icebergs. You don't see them. And they'll hunt also. There are a lot of white papers. If you want to learn more about market breadth and off exchanges and dark pools and icebergs, you can go to Google Scholar. It's different than Google. It's this white paper only version of Google. It's like a big college library. And you can read about all kinds of different college papers that are written on the marketplace. And guys, I'm telling you what, you want to geek out and spend an afternoon crawling through the library, Google Scholar will keep you entertained all day long. So I'm looking at this $1 level on CGIX, or the round dollar level, the $7. And I've got Tom Busby in my mind here, where I'm looking for a fade to come down and validate this level of support. This strong candle here, our engulfing candle that printed this 750 high, we want to see after this breakout the market come down and validate $7 and hold before running upward. So you're absolutely not chasing because we're defining our entry, we're defining our strategy. If you was to pull the trigger at $7, you could look at this price shelf here in the pre-market as an area where price shouldn't go, right? And so if you say, well, if I get in long at 7, and I'm not a scalper, so I'm not going to take an overly large position, and I want to give the market a little bit of room. If it breaks below 6.5, I could start to consider that maybe I'm wrong. That I thought it was going to go up, but now if it's breaking below that 6.5, perhaps it's convincing me that I'm wrong and I should be looking to get out of a trade. I wouldn't want to put my stop at 6.5 because the algorithm will hunt for you at that location. But you would want to determine somewhere in this area for your exit. If I am putting 75 cents on the line, then I'm going to need a target at least that high, right? Depending on our win rate or our strategy. Are we going in with volume behind us? Are we looking for an entry based off of a pattern like the flag? This is a very, very tiny flag, but it is a flag. Well, the pole is there. The flag isn't quite shaped yet. So here's our pole. And we'll just use it from over here. So just like planting the flag at Iwo Jima, there's the pole. We don't yet have the flag. AMD is giving you guys a wonderful opportunity. It has defined itself, and now you're waiting for it to decide. Just like you said, it needs to make a decision. If you're not yet in a trade, the hard thing that I had when I first started day trading was that I was looking at everything. You can't. You can't watch everything. So it's better to just take a look at everything on your list and weed out the ones that already had their breakout, and then take those off the list. And then whatever is left, things like AMD that hasn't yet broke, that would be what you keep on your list, right? And so then at that point, you might have 4 markets to look at instead of 14. Vulcan, that is awesome, and I'm glad that you saw it. Um, look at what Vulcan wrote in the room there. He has his defined range. The 1, 2, 3 is an amazing fib level. Him and I have talked about it multiple times. It broke pre-market and it retested, and now it's moving up towards a level that he has defined. And it's clockwork. It's textbook. Exactly what he was anticipating, and it did as he anticipated. We are 2 minutes out. 2 minutes to the bell. CGIX, by the way, guys, is still up 246%. So do keep in mind where it's sitting. It has defined itself well at this point, but it is still greatly extended on the day. I don't like to use the words overbought and oversold. As I said earlier, that has negative connotations. There's our spike. So we're getting the information coming out. Typically, I have a trade alert on a news service called Live Squawk. They're on Twitter, and they are absolutely the best when it comes to economic data. They have not yet posted. And remember, there was news about an IPO oil product, a new world record on IPOs from Saudi Arabia. And so it's also going to be interesting how that is going to affect everything else. And then there was some data about supply that it came out. I was reading an article yesterday that our supply levels had been setting some concerning news. And so that's also worth having some perspective on. Lucian gave a shout out on FCX. It's testing the VWAP And that is another indicator that I always give a thumbs up on. There are so many indicators that I poo-poo and say, oh, you don't want that. That's a horrible indicator. Stay away from that thing. It'll blow up your account. The VWAP is a channel indicator that is used by institutional, retail, algorithms. Everybody uses it. And that makes it very valuable. Still waiting on Live Squawk. Seems like it's taking its sweet time today. We've got FCX, AXL. So USO has broke to the upside, and there are our crude oil inventories. Estimated at 1, and we got 1.7. So this should be a nice upside move. There's your numbers, guys and gals and ladies and gentlemen. $13.79, which is low because the estimate was 15K. Previous was 22. So we came in under the November estimate. So don't know what we're going to do with that. Every time I try to jump ahead and say, well, we came in short, we should be able to get a nice squeeze out of that and try to go long, and then I end up with a dud. And so I've learned not to just jump and let the market decide how it likes this data. Because how I liked the data, turns out the market doesn't care what I think. It's disappointing, to be sure, but just because I liked it doesn't mean everybody else does. It seems like we're all in agreement. The market seems to like. The trend is your friend. Creed is absolutely right. I don't have many friends, but the trend is one of them. I am a trend trader. I don't like to trade a range-bound market. That leaves me sitting out more often than not, and I'm okay with that. I'd rather have very few trades that are really good rather than have a lot of trades that are kind of iffy. So our level of resistance in the near term is 75, and I'm still looking for $12 on the day. This wasn't a massive news event, and we never know if it will be or not until it happens. If those numbers were drastically skewed, this would have ripped to $12 in the blink of an eye, or it would have dumped to $11 in the blink of an eye. Yeah, Vulcan, you probably missed it when I first started the stream this morning that I'm willing to talk about it at the end of my morning live stream if any of the other contributors don't want to jump in. After streaming all morning, I'm going to want to stop and grab a coffee. And I also want to make sure that Angel and Rose, and Dan, and Lucian, and Creed, if anybody else wants to contribute, that I'm not hogging all the airtime. So when my morning stream is done, I want to take a small break, get a drink, check on the wife, and change her bandages. And then if nobody's streaming and I'm not interrupting anything, I'll happily come in and we can go over the PPS and how I use it for a Friday expiration trade. Absolutely. And if not, then, we can work on something like that Friday afternoon because I will also be streaming then. And it is a great way to end the week because then you'll have the weekend to really set your system up for it. And I have built scans, personalized scans. So I didn't just go in and click all the scanning buttons. I wrote code for specific scans so that we can use it on an intraday basis, and we can use it on the evenings when the market's closed. And then there's indicators and watch list columns. I did the work for everything. Um, and we can do that, absolutely. Yeah, Danny, I do. The VWAP is a perfect example. It is a self-fulfilling prophecy. Algorithms are programmed with it. Buy and sell orders are done with institutional traders with it, and retail traders use it. So everybody is using it. And if you think of a trading firm, they'll call up and they'll say, "Look, guys, we want to liquidate our Microsoft position. What can you get me?" And they'll say, "Well, we'll promise you VWAP. So in the next 5 days, we'll liquidate your position every time price touches VWAP." Okay, thanks. So that's one way. And then the algorithms are designed to buy and sell at VWAP. And those two things alone give it value. And then the fact that everybody else is watching it also gives it value, right? So um, when you are looking at a market and there's a VWAP in place and price keeps coming down and touching the VWAP and then moving up, and then it fades back down and touches the VWAP and moves up, it's because there's an algorithm that's functioning at that point in time who's either entering or exiting a position at VWAP. And every time it like sprays its orders, it moves price away from that VWAP. And then as it gets too far away, the algorithm stops, price fades back to the VWAP, and then it kicks back in and it does it again. When that stops, when that algorithm has finished doing its job, you'll see the market move away from VWAP and choose a direction, right? And then that is our trigger to take a directional trade at that point. So yes, I do believe that there is a lot of self-fulfilling prophecy on some indicators. But remember, 95% of your indicators that are on all of the broker platforms out there are worse than flipping a quarter. That you would have a higher win rate, literally just choosing heads to go long and tails to go short and flipping a quarter, than you would using an indicator to take a trade. 95% is worse than flipping a quarter. So please keep that in mind. One thing that I do love about indicators is that you can use them for scanning. And I find so much value in that. Scanning for an RSI, scanning for a stochastic, scanning for, you know what I mean? That. Um, think of indicators as training wheels. When you are new and you need some stability, those indicators can help hold you up. But they're looking at price, and you should be looking at price. And so if you aren't very good at doing it, let the indicator help you out. But over time, as you grow as a trader, your need for a crutch or a training wheel should decrease. Phil, you can look in the upper right portion of the screen and you should see a button that says refresh reload room. You can try that to help with your audio problem. And if that doesn't work, hit that power button that says leave session. It's going to exit you out of the room, but it's so that you can come back in again. Did the refresh? It must have worked because I'm talking to you. Yeah. We uh, pay for a product called this Pro Trader, right? And like all products out there, it has days. And, depending on how many people are in the room and how much pressure we're putting on the servers, we could be using it to its maximum potential. Um, we just do the best we can with what we got. It's not a bullish bears thing. It's it's just a product that we use. When I first started trading, I used the stochastics. So USO, guys, I really am keeping my price target for $12 for the day, and I mean you could take it out for the week if you're so inclined. Just recognize that we have been in a defined range. There's your channel. Whoa, that's not what I wanted to do. So there's your defined range, and we're at the bottom of the channel. We're working our way back up. Well, Danny, I'm glad to hear that. I hope that you grow in your options trading and don't stop there, because uh, the more that you use them and learn what they can do, they offer you so much potential, especially a sideways market. It's one of the things that I love about using options is that I don't need price to do anything. And there are so many products that just sit there and don't go anywhere, and that really gives us some trade opportunities. Um, Credit spreads make more money than debit spreads, and they're also easier to hit, and that's why they're my favorite. I used to only look for high implied volatility to trade spreads. I no longer do that. The back testing has proven that even with an implied volatility rank below 40, you can still put on a credit spread and be profitable. So if you get rid of the IVR filter, your win rate does not decrease substantially. And that means that the opportunities for trading goes up a lot. That's not bad. That's not bad. So I hit a deer Friday when I was taking my wife to the surgical unit from one hospital to the next. And it didn't look like I did too much damage to my car. And yet they called yesterday and said, hey, that's a total loss. So kiss your car goodbye. So we had to go car shopping yesterday. And I ended up with a Buick LeSabre 2017, fully loaded with all the bells and whistles. And my wife just came in to tell me that it changed our insurance by a measly $50. So that's not bad. The color code set up to measure what, Creed, on a PPS? Or are you talking about on this? Oh, no, this is the TTM squeeze. Just the plain old, regular, everyday TTM squeeze. Yep. Um, your sidebar system really got my head turning, and I'm looking for putting together something like that of my own, a different concept, because as usual, we seem to feed off of each other's ideas. But I'm working on this master's class in statistics, and it's kicking my butt. So until I get done with that, I'm not looking to jump into anything new. Um, but yeah, I definitely, your sidebar has got the wheels a turning. I did a video. I don't think it's on the bullish bears because I think it was just a part of something else. I do need to pause for a moment. I got to take care of some side business with YouTube. So give me just a second. Uh, okay, for everybody here in YouTube world, I'm going to shut off this live stream. I again really hope you stop by to the Bullish Bears website and sign up for our 14-day trial. It doesn't cost you anything, and so at the very least, you get something for nothing. And I really hope you come by, and in your 14-day trial, you can come into our chat room and you can give a shout out for markets to be analyzed, for indicators, for discussions of options, and all the other great things that we do. I look forward to seeing you there, and tomorrow there'll be another person live streaming also. So if you'd like to just keep catching our YouTube streams, then we would be glad to have you.